Okay, this is day one of our $3,000 to $25,000 challenge. Today started off extremely aggressive. I realized that playing around with a smaller account is not going to be as simple as I thought it was going to be, but it's okay. Doesn't scare us at all. I'm just going to have to play this a little bit more patiently, but I'm actually 0 for 2 right now. I got stopped out twice. Took 3 trades today. Like I said, I was going extremely aggressive. I wanted to see if I can start this challenge off right, and I actually put myself down a few. So currently we're already down about $126. Let me just explain those first 2 trades and why I got into them, what was on my mind basically. The first trade we got stopped out of was TNDM. As you could see, I lost $55 here. But what I saw, I'll show you the exact entry point. Well, of course, this was my first trade. I was excited. The account was ready and funded. And I'm like, all right, let's get it popping. Let's get this first trade going. And I just got in a little bit too early in this case. So I basically drew my trend lines here. This is the 1 minute, 1 day chart, by the way, for the people who want to know. I basically drew my trend line, so I seen this obvious uptrend here. I thought it was simply going to continue the way that it was going. I had, what was my indicator here? Let's scroll in. My indicator here was basically, I drew my first price level, or I should say my 43.47 price level. I think I got in around over here, which was the 43.37 level. I got in and I'm like, okay, if this breaks this price level, it's gonna keep running. So in my head, I'm like, okay, perfect. Looking on the day chart, which is this chart over here. This is the 3-year 1 day chart. Each candlestick is 1 day. I'm like, all right, my EMAs, which are these lines, I'll explain that in later videos, basically what that is. And my 200 EMA is basically forming all support levels for this trade. So now, yes, I'm a little bit late, so this is the chase, but I realized this little pullback yesterday, and today it broke our 42.05 level. So now in my head, the way that I consider it is, when I draw these price levels, it's only 2 situations happening in that one instant. If it breaks that level and my volume is high, then I'm thinking the bulls are here to play. It's gonna keep going. It's gonna keep running. Now, if that's a strong enough price level, that price level would have literally rejected that penetration. So if you could see here, I'm gonna zoom in a little bit to this chart. You can see how this price level rejected here. Boom. Then we have a slight break here. Then we're basically dancing around this 42.05 level. So now traders are in a way indecisive. You see momentum decreasing because the bodies of these wicks are getting smaller. So just to give you a little insight on the way that I see these things, the candlesticks tell a story. I'm a pure price trader. I know you see all these indicators here, but all these indicators are, and what I usually tell these indicators, the purpose of these indicators are basically to stroke my ego. I do not trade based upon these indicators. I do not make decisions based upon these indicators. I make decisions solely off of what I see on the charts. The charts tells me everything that I need to know. My volume, when I draw my price levels, are basically every time the price bounces or lingers around a certain price level, I consider that a psychological level. or intervals such as 10, 20, 30, 40, 50. I see those as psychological levels. And the point of this is basically to trade in sync, to basically understand not only the market but the people within the market, because you have to understand you're facing other traders. You're not only facing the market, you're not only facing the economy, you're facing other traders. So you have to be two steps ahead. It's either you have to be with the crew and be the first to, join that group, or you have to know where the fear is going to come in. You have to know where the short squeezes are going to come in, and when buyers are getting squeezed out or sellers are getting squeezed out. So it's really a psychological game, and it's not really a way to predict or know exactly which direction the stock is going into. You're playing probability here, and not to go too far off track. What I saw here was basically this linger around the 42.05 level, and I took a chance. I said, you know what, this is about to close above my price point. This is not going to stop here. It's not going to bounce here. I think it's going to keep going. So that's the assumption that I made to myself. So based upon my day charts, like I said, I set my stop losses too tight. In this case, coming from a larger account, um, you have more wiggle room. You could play around more, and I'm okay with losing more money. The problem with a small account is we can't necessarily lose too much money, because the more money we lose, the less options we have, the smaller our positions are. So if we want to grow this quickly, and if we want to basically get up to our 25,000 mark, I'm honestly gonna have to play this a little bit patient, and put away the day charts, and just swing trade. Try to see if I could at least swing trade up to $10,000, and when I have a little bit more playing room, then we'll take it from there. But analyzing this play, so I got in. Of course, then it hit the high, and of course, my mind is set to day trade. Day trade. I looked at how much money I made. Of course, you never do this. My emotions got attached. I stayed in the trade. I thought that if it did pull back, it wasn't gonna pull back below the 43, 47 line, and I was basically gonna linger until 4 o'clock. I was horribly wrong, because of course, as you can see, we had a short drop here. We had people, whether people were taking profits, or getting out of this trade, simply because we had this little consolidation here. So people didn't want to play around with this anymore. And then you start to see our SMAs and EMAs cross over, and that's a signal to me. That's a bad sign, because now what was now my support is now my resistance. And now it's showing that now I have a downtrend. Now things are reversing, or a short-term downtrend in that sense. So once I seen this, my stop loss was about 42.85, kind of. Yeah, it was about 42.85 to be exact. I gave myself some wiggle room off my bottom resistance. I'm sorry, my bottom support line, and I basically just hope that it didn't come that low, but it did. It came down, stopped me out of my play. It's okay, and then it slightly recovered above that support line. And then later on, still, like I said, I was okay getting knocked out, because as you could see, it reached back down to that level. If I did survive, I wouldn't have survived the second time. So I got knocked out of that trade. Moving on to our second trade, which was CGC. On our CGC trade here, let's see. Let's back out. So same concept. The first thing I always do is I look at the bigger picture. So I'm looking at my day chart. I basically see that we have this uptrend going on. Again, like I said, I'm getting very hasty. I'm still in day trade mode. But I have to realize that I have to revert back to swing trade mode. I was way too late into this trade. I thought this was going to continue. I seen my crossovers here. My SMAs and EMAs are basically lining up to become support on the daily chart. So I'm thinking, okay, I could probably ride this wave for probably a day or two and make, an honest, 100 to 200, $300 off this trade. Same thing. I cut my stop loss a little too tight, and the pullback was bigger than I anticipated. I tried to get in and basically just sit on this pullback for a couple days, but like I said, I have to change my mindset. My stop loss was too tight. So I basically got in. Let me see. Let's scroll forward here. I basically got in at this level right here. So I seen this pullback come really close to my 43.18 line. I wasn't here for these two bounces, these two touches. So here I thought this was going to be my third opportunity. Waited for this pullback, caught it all the way at 43.37. So I had a beautiful entry if it only held this price level. So like I said, we're taking high probability trades. If it held that price level and my EMAs and my SMAs held strong and basically held that support and I survived into the next day, I probably would have been fine. But what happens, we get a gigantic dip, and you can't always see them. Like I said, they sometimes they come at really random times, but this is why we secure our risk management. We know exactly how much we're willing to lose, and we just, get stopped out of the trade and we move on. But same concept from the last trade. I set my price levels from a day trade. Well, actually, look how hasty I was. I didn't even set my price levels on the daily chart. So you can already see how sloppy these first two trades were. And I also think my third trade was sloppy as well, but I think I'll be fine on that. I'll explain that in a minute as well. Here, usually I would set my first two lines as the high and the low, daily high, daily low. And then I'll get in between. So I'll look for other points that basically had bounces. Let's say right here, you know what I'm saying? And let's say right here. And then I could probably consider right here a bounce as well, right? So let's do that. We'll keep those levels. We'll keep an eye out on it. But basically, I set my price levels on a 1 minute daily, 1 day, 1 minute chart, which wasn't a good idea. Obviously, I was still in day trade mode. And my stop loss was far too tight. It was far too tight. But even though it still worked, because even though I gave myself some space, I gave myself some room, look at this drop. So my stop loss saved me from losing way more money than we would ever want to with such a small account. So going back to the third trade that I'm currently still in, I have not been knocked out of. Hopefully I never get knocked out of it. Hopefully this goes positive. But ABM, very, very same concept. And I'm going to keep reiterating the fact that it's the same concept, because what I want people to understand is consistency. I don't trade using different setups. I don't try new things unless, somebody from my team or somebody who I know has, a lot of background, a lot of success trading says, hey, check this out. Like earlier, people from the SML team, the Stock Market Lab team, they put me onto the VWAP. As I said, I'm a price action warrior. I don't use indicators. I don't use too many of those flashy things. So they explained the VWAP to me, and then I realized that the VWAP could actually be a very strong tool when it comes to day trading. But we'll also go into that on another video. But here, same concept. I already set my price levels. My price level at 35.07. I see on the day chart again that my EMAs are and my SMAs are forming to be my new support. So now all I have is up potential, up potential. And I currently had about 4 green days, got rejected at this 35.07 level 4 or 5 days ago, and then basically it started to consolidate. So what I'm hoping is we could probably get a break on this 3507 level. If not, it will go the opposite direction. But this is me making that assumption. See, I don't know which way it's going to go. But based upon my trading style and my trading setup, I understand the amount of risk that I take. For every trade, let's say I lose about $50, $60. And that's me trading aggressively, trading to the highest ability of my current account. But if I don't lose, I have an upside of, 100, 200, 300, because once I get on the ball rolling, it's going to keep rolling. We ride our winners, you know. So in that case, I'll definitely keep everyone updated with this ABM trade. But I just wanted to keep you guys involved in day one and showed you, yes, we started off down. As you could see, we lost about $126. So now the account is probably down to like $2,900. But in any case, we're going to switch things up. We're going to become a little bit more conservative. I'm going to be a little bit more reserved and manage my risk, manage my patience and my emotions a lot more. And going forward, we'll see exactly what happens, see how long it takes us to get this account to where we need it to be. Thank you for tuning in today. I'm thinking this would probably be the first video on the profile on the account. So this is going to be a new thing. I'll put up tips and tricks here and there, things that I like, things that I've tried. Hopefully we'll also make a Forex series, because I know a lot of people wants to know about Forex. But I'll try to take things one at a time. Once we could grasp everything stock wise, the same thing I apply here, I apply in stock. The only thing that differs is my stop losses, is my risk management. Forex is a lot more volatile, so that's what we have to worry about. Volatility, the stocks literally bouncing up and down in a matter of seconds. But other than that, it's practically very similar. Looking for catalysts, looking for news, using your price action, using your candlestick patterns. These are all things that we'll talk about in future videos. Thank you for tuning in. Subscribe, like, please comment any questions. I'm fully transparent. I'm willing to walk anyone through anything, or if I have to make extra videos on specific topics and explain specific things like the EMAs and the SMAs, or the price levels, supporting, resistance, or candlestick patterns, or anything of that sort, downtrends, uptrends, sideways trends, consolidation, anything you need to know, please put your questions in the comments. Feel free to contact me on Twitter, Facebook, whatever it is. I answer all my private messages. Thank you.